Oh man, so another slightly red day here for Bitcoin, holding up pretty well at 29,500 at the time of recording this video. But watch out, because there are still some signs that we could be heading lower. So I wanted to make this video to make sure that you watch out for a certain catalyst, okay? So today we will be receiving the FOMC meeting minutes. Those are the minutes from the previous Fed meeting from when they increase interest rates to 0.5%. Really important that we listen for what is shown in that report, because markets can react to that. If the Fed officials are coming off pretty aggressive and really hawkish and they give us any clues about the next meetings and the meetings thereafter, the markets can respond. If they come across dovish, again, the markets can respond. So we need to look out for that. We also have a few Fed officials speaking, which we need to pay attention to. Now, as you can see here on this chart, very important here that you can see Bitcoin is almost acting like a stable coin, right? And I'm zoomed out here on the daily chart on purpose because I just want you to see that for now, since 11th of May, we've been in this sideways pattern. It would have felt like a bit of a roller coaster given the wick for Luna, but ever since then, we've been acting like a bit of a stable coin between about 28 and about 30 and just slightly over 30. So now if I come back here to the hourly chart, you can see that the struggles are around between pivot point number 2, that's where the bulls are coming in and buying, that's our support level. We've bounced once, 2-3 times there, again, and again, okay? So we're getting a good level of support here at 28,600, let's call it. Now, equally, we've been unable to break through the 31,000 level, okay? That's been the level where we've not managed to break out. If we do break out from it, we can start heading towards our price target back towards 37 from a technical perspective, right? But short term, get above 31, start working towards 32. But Bitcoin just can't seem to do it. To the downside, the bears will be thinking, hang on, if we can push Bitcoin below 28,600, we could start heading towards the bottom of the wedge. And the bottom of the wedge brings you to 26,200. Okay, and if you lose that, then you start heading towards 24,000. Now remember, if you haven't watched my videos, I explain many reasons why 24,000 could be a potential bottom for Bitcoin. And there's various evidences of from using on-chain metrics. I'll try to link up the video for you guys to go watch, suggesting that that's the key price. One of the key metrics which shows that is the realized cost basis for many investors. Okay, so that's the cost basis people are working with. So when you start falling below 24, now the vast majority, well, it's already vast majority, but pretty much everybody on an aggregated basis is in a loss, right? So it's an important level. It acts like a floor. So that is what we're looking at to the downside. And ever since we were starting to form this wedge, I maintained, particularly to you guys and our course members, that we could be starting to fall towards 24. So my strategy was nibble. Whilst we're in these ranges, nibble, because we don't quite know. And anybody who's telling you they do know is lying, right? We don't know whether this is going to set itself up to break towards the higher side, get towards 32, start working our way towards 37, or are we going to lose this pivot point number 2, which is 28,600-ish, and start heading to the bottom of the wedge, right? Which is sitting at, the wick was really low, but if we just take this bit here, sitting at about 26,300, which obviously is going to be a nicer entry for you to accumulate. Now, my strategy is to nibble, because we may well head lower. And I'm still preparing myself for those price points. I'm keeping some cash to the side for those levels. So any accumulation I am doing, and I am nibbling right now, is just gentle nibbles, just in case, just to get rid of that FOMO that if we do go to the upside, I know I did do some buying around this level, because, if you've got a long-term strategy here on crypto, buying at 30, 31, 29, not really going to make a difference to you. What will make a difference is the difference between 30 and 25. So if we do fall to 25, 24, I want to make sure I've got ammunition on the sidelines to buy more, because that makes a big difference. You've got to remember, from 30 down to 25 is about another sixth down, right? It's quite a lot to fall that way. So we don't want to miss out on that opportunity to the downside. Now, I've seen something a little bit worrying, which I want to mention, which gives us a slight downside bias. So let's cover that off. And the reason for that is as follows. So when we initially ran up, you can see here, so pivot point 2, bulls came in at pivot point 2, ran us up, we broke through 31 and we wicked to 31,400 roughly. Bears sent us back down. Bulls created a higher low, and then they lost steam halfway through the run, right? They didn't get close to the 31 level mark. And the bears pushed us down to pivot point 2. Okay, now the bears are in control. Are we going to go down to pivot point 3? No, bulls came in, brought the price back up. Took us up to a wick of 30,729. Again, couldn't touch the 31 mark. Came back down to support. Bulls come in again. This time they took their time and built the price gradually back to the top. But we got rejected from the same level again. We're getting rejected now from 30,600, which is where my cursor is now, as opposed to coming up to 31. Now look what happened. We came down. This time, we got rejected even lower. We're getting rejected at 30,200 versus 30,600. I know it's only $400. It might not sound a lot, but from a technical perspective, and if you're looking at the psychology of bulls and bears, the bears have come in sooner here. So they've taken control. They formulated a lower high. This is not great. And now they're going to push back down with more momentum and try to break through pivot point 2. That's the story now. And unless something happens in equity markets to suggest otherwise, we could say, okay, maybe we're going to lose pivot point 2. And remember, if we lose pivot point number 2, we're heading to the bottom of the wedge. Okay, now let's take a look at the equity markets, because you can see the pre-market, we're opening up in about 15 minutes or so from now, but the pre-market is giving us an indication that we're seeing a little bit of red, nothing too crazy, but a little bit of red, and they're waiting for the FOMC meeting. So we'll try to do another update later on. I'm on the road today for got another 5 hour or so drive, but I'll try to do another update based on what the Fed is saying in order to get an indication. But the market's still unhappy. Earnings aren't coming in too great from many companies. They've got the fears of the interest rates. It continues to weigh on the market, and we could see more downside. I mean, to put this into perspective, I was saying in yesterday, if you're not watching my videos from yesterday, go watch that. It wasn't just technical analysis, just my musings around where we're at. This is not crypto-based. All other corrections pretty much in crypto were, okay, fine, what's going on with crypto? It doesn't matter about crypto right now. This could be another asset class. Everything is getting hurt right now. And the only little bit of place where you're getting a little bit of relief right now is in bonds, right? Bond yields are falling, which moves inversely to the price of bonds. People are moving into bonds. So the stock's loss and crypto's loss seems to be going into bonds right now because investors cannot find safety. They cannot find certainty, and therefore they rotate out. So we're seeing this massive rotation, and there's no evidence that that is stopping just yet. That is why I'm leaning towards the downside bias on crypto, okay? Now, that's not a bad thing. Identifying that is the first step. Now, a lot of channels will try to trick you and say, no, we're going to go to the moon, get ready, right? Not what we do here. If we're going to be down for a while, and, whether it's 3 months, whether it's 6 months, whether it's 12 months of a crypto winter, we need to be prepared. Those who are serious about crypto are going to watch these videos, are going to educate themselves, are going to accumulate their positions, get into the right tokens in the right balance. They're going to learn from what happened with Luna, which, by the way, Luna 2.0 has been passed, right? So they're going to go ahead and do their fork, which they don't want to call a fork. That's a separate conversation. Okay, so they're going ahead with that. And we need to just get in our right portfolio allocations. Look at the good projects. Look at projects that have been there, seen there, done that. Go look back in the history. Go on the price chart. Just go back. See how did they perform. Because right now we are at extreme fear. We're sat at 11 again. We've been at extreme fear for a while now. So when this opportunity passes you, nobody here is going to have an excuse to say we didn't get an opportunity to buy at the good prices. When Bitcoin starts getting back to all-time highs, you can't say you didn't have an opportunity. And that's the reality. And you may get another opportunity at 25, 24, 21. But the reality is you take the opportunity in front of you, right? You take what's in front of you on your plate right now. And right now you've got Bitcoin at 29,500. So it's important to take that decision on its merits. Yes, you may get a 24,000 Bitcoin. Yes, I'm preparing for that and leaving a little bit of capital on the side. But still today, I need to, do I want to nibble a little bit in my portfolio to grow the portfolio at these current prices? And for me, the answer is yes, a little nibble. Doesn't mean I'm aping in. Doesn't mean I'm going crazy. If I've got $10,000 to allocate as an example, I'm not putting all 10K in today, right? Or with, FOMOing in. I've got a strategy. I'm going, okay, I'm going to put $500. I'm going to put 1,000 if we dip to here. If we dip to here, I'm going to go even heavier and put 2,000. If we get to 24K on Bitcoin, I'm going to put 5,000, right? I've got a plan. And the key right now, if we do have this prolonged downturn, as in a global slowdown, a recession, suppressed crypto prices for ages, well, you need to build. Builders are the ones that they build in bear markets, and they celebrate and have their good times in bull markets. Many examples: OpenSea, Coinbase, many decentralized apps as well. You build in these downturns, and it's the same for your portfolio. You want to be building your portfolio now, and you want to let it speak for itself when the next bull run comes. But the reality is, the majority of people don't do that, right? The majority of people, they want to come in a bull market and profit in a bull market and leave and go on holiday right now. That's not how it works. Now's when we need to get to work. Every little bit you're putting into crypto now, whether it's knowledge-based, whether it's research, whether it's actually physical money in your portfolio, goes far further in a bear market, in a winter. So it's really important that you double down in on that. Really, really important. So that's what we're seeing here on crypto. I want to keep an eye on this. Key levels here is obviously the 31,000 mark, right? If we head on over to the weekly chart, just for completion's sake, let's get a cleaner chart. This is what we're looking at, right? We've had our 8 red candles. We're opening up another one now. And the key is we've got to hold above 29,000 here. That's the horizontal level where we've managed to hold nicely above. And you want to see, a bit of a curling action. If not, and we do start heading towards 24, then that's a separate conversation down here, because then your support is sitting at 20 and 24 is the other support, which I was sharing with you as well. Okay, so that's what we're looking for, guys. Make sure you stay rational. Make sure you continue to educate yourself. You know, the down markets are really most the important time for you to be doing the buying. And I said this yesterday, and hopefully it resonated with a lot of you. If you're not buying now, when are you buying? Like, very simply, if I show you this chart, if I showed a 10-year-old, right, you're investing and you want to buy, you want to buy here, you all know this, you want to buy here and you want to sell here. So what is this right now? Most people, their brain becomes irrational and tells them, no, we're going to go all the way down here, right? And that prevents them from buying here. And yes, there's a probability that you could come and do this. But what's that probability versus the probability that you go back up here to the top of the channel, given the history of Bitcoin now? It's not a new asset, right? Relatively it is compared to other assets, but it's not a new asset class. We've seen how it's operated before. We know that as of just November here, every single person who ever bought Bitcoin was always in a profit, right? We've seen that. So surely it should give you confidence if you do your research. And those that don't have conviction, trust me, if you don't feel that or you feel uneasy, one, you're investing too much. You're misallocated, okay? You've invested too much of your savings. You've not got cash on the side. You've not got other assets. You've not got a business or good cash flow. You've not got property. Therefore, you're too invested in crypto. Or your allocations are bad, like you're in crazy altcoins, and therefore you're going to 100% feel it right now. And three, the other point is that you don't have conviction. You've not done the research. So if you're feeling that right now, those are the things you need to look at. You've not done the research. You've not spent 100 hours understanding Bitcoin, not the price of Bitcoin, Bitcoin, the ethos, why, the white paper, why does it exist, where's it going? Go learn that stuff in a bear market. And just to kind of finalize this message, really, if I move me out of the way, just want to show you this because we're in a Bitcoin season, okay? And Bitcoin's holding up really well. So if you come to this at the end, at the bottom, I just want you to take a look at this. So for a lot of you guys, particularly those who are new to crypto, and new crypto investors are born every single day, so I have to repeat this message sometimes, it's very easy to misallocate in a Phantom, in a Luna, in an Avalanche, in a Sandbox, in a Gala, in these types of projects. But when you look at this chart over the last 90 days, what's held up the best? Pretty much Bitcoin, right? Yes, there are other smaller projects which slightly, but mainly is Bitcoin. And Bitcoin dominance goes up and Bitcoin does well in these periods. Now, where are the likes of Phantom and Luna? They fall into this category because they're risk. When the market's down, they're down heavier. But obviously when the market's up, they go and explode. But you cannot have, that's a recipe for a heart attack, to have that as all of your portfolio. The majority of my portfolio is Bitcoin, Ethereum, Solana, Cardano, big stable projects. Small portions of my portfolio, part of the layer one, have a bit of Phantom, okay, have a bit of Algorand. There's small control bits of my portfolio. If any one of them got wiped out, like my small Luna position did, it really doesn't matter. You shrug it off, you build your portfolio, you keep it moving. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. If you like my perspective, consider joining the course member live streams, ijaz.uk/member. I'm going to link up the video for you to go watch the interview with Michael Kong on Phantom, so go watch that, and I'll see you in the next one.